Fed about to slash interest rates as economic warning signs flash red. Dive into today's episode of Eurodollar University with Jeff Snyder and uncover the potential rate cuts, troubling job market data, and how other central banks' moves could influence the Federal Reserve. It's a compelling look at the shifting landscape, so stay tuned to understand how these changes might impact your financial future. Don't forget to like and subscribe for in-depth analysis on crucial economic trends and updates. Your financial decisions may depend on it. Today, on Financial Analysis in Review, we will summarize the following videos. From Eurodollar University, we have "This could force the Fed to cut rates in July." Welcome to Eurodollar University. Today's episode dives deep into the potential Federal Reserve rate cuts this July. The one and only Jeff Snyder is at the helm, guiding us through all the economic twists and turns. The central thesis here is that declining economic conditions, especially in the job market, might compel the Fed to cut rates as early as this month. Despite their stated patience, the crumbling economic data is becoming hard to ignore, even for the ever-optimistic Jerome Powell. Here are the key points discussed by NA economic indicators showing weakness. Recent critical readings on U.S. services are at their worst since May 2020, signaling a worsening economic condition. Unemployment signals are flashing red with a sharp and sustained rise in jobless claims, the highest since November 2021. Big companies are warning about price cuts and customer spending power, pointing towards future job cuts. Federal Reserve's public versus private stance. Jerome Powell publicly states the economy is strong and resilient, but internal data tells a less rosy story. Powell admits at the ECB's conference in Portugal that he's concerned about a sudden downturn in the labor market despite his public assurances. Traders hedge against rate cuts. Traders are aggressively hedging for a recession, betting on significant Federal Reserve rate cuts tied to the secured overnight financing rate so far. Bloomberg reports traders expect up to 3 percentage points worth of cuts in the next 9 months, indicating a lack of faith in the Fed's resilience narrative. Global trends in central bank policies. Other central banks like the ECB and Bank of Canada have already begun cutting rates despite ongoing inflation issues, setting a precedent the Fed might follow. NA made the following predictions: Federal Reserve to cut rates. Given the deteriorating job market and economic signals, Jeff predicts the Fed could cut rates as early as this July. The Fed might take cues from other central banks like the ECB and Bank of Canada, who have already cut rates amidst rising unemployment. Worsening economic data. Expect more dire economic reports, particularly in employment figures, challenging the Fed's public stance on resilience. In summary, with the economy seemingly spiraling downward and job market numbers getting uglier, the Federal Reserve might be forced into an early rate cut. Stay tuned to Eurodollar University for more in-depth analysis and updates on this unfolding situation. And hey, while you're at it, check out their anniversary sale for some insightful deep dives and daily briefings. Until next time, let's keep navigating these economic rapids together. In this video, Jeff Snyder presents the case for an imminent Federal Reserve rate cut, driven by weakening economic indicators and a deteriorating job market. While Jerome Powell reassures the public about the economy's resilience, internal concerns are growing. Jeff contends that the Fed may follow in the footsteps of the ECB and Bank of Canada, who've already cut rates amid rising unemployment. Stay tuned to Eurodollar University for more insights into these perilous economic times. Thanks for watching Financial Analysis in Review for July 4th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.